Well, guys, Bitcoin did it on the back of the bullish setup we were discussing last week. We got fresh all-time highs this weekend. And as for the S&P 500, the first 4 trading days of October have all set records, marking fresh all-time highs every single day. I promised myself I would not say Uptober, but the start of this month is really turning out to be exactly that. So we're going to go with it. And if we do see a positive October, historical stats point to November and December being positive as well, which means we may not get that Rectember correction that generally gets pushed out to October in post-election years. It might have to wait all the way until January. Shout out to Michael from Patreon who came up with that one. I thought January, that's pretty good. That's new. It's original. We're gonna have to coin that one. Anyway, so we have all this bullish price action on one hand, while many on the other side are saying that we're in the midst of an AI bubble that is about to burst. And yes, the sector, it will most likely eventually see some growing pains. But when everybody is calling for a bubble, that's usually not when it pops. So keep that in mind and let's stick with the flows. And the flows, they are looking like up only from here, at least judging by today. But let's dive into the charts for stocks, commodities, and crypto to see what they are really saying, especially in the near term. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom and I hope you all had a good weekend. Before we dive in, if you do find value in the content, I always appreciate the likes, the comments, the subscribes. I try to respond to everyone. And if you have questions or chart requests for the next video, leave those down below. And all that interaction really means a lot to me personally, and it helps this channel get off the ground and get out there to more people. Now, we have a ton to review in the charts today, but let's first talk about the macro a bit and historical trends. We obviously saw a very bullish day in markets today with almost everything up. It really felt reminiscent of 2021, where one could just pick about any growth stock, any crypto, even a JPEG, and it would go up in value. But it's times like these where it's important for us to remember that periods like this aren't the norm and they don't last forever. And we should start setting for ourselves some plans to take profits, especially if we get a massive vertical spike. I know we're talking about potential cycle extensions into next year, but if things really run into a blow-off top style scenario where we're getting gap up opens, massive vertical candles, be ready to lock in some profits and don't ride that all the way back down. That is financial advice. So, where did all this bullishness today come from? Well, it mostly flowed on the back of Japan's elections and an outlook for much more liquidity pouring in from that part of the world. So, Japan, welcome to the liquidity party. It's nice to have you. The Bitcoin spike to all-time highs this weekend. It also came on the back of those Japanese election results. And to me, if we're looking at the order books, it honestly just looked like sloppy trading by bigger institutional investors who really didn't use more discreet methods to make larger purchases. And that pushed the price up too quickly. Now, with all this bullishness and positive price action, one would assume that everyone is chasing equities. But from this chart, we can see that investors are actually still chasing safety via money market funds much more than they are chasing equities. Now imagine what is going to happen once all that capital realizes that it needs to catch up and rotates. That could really be exciting. Which brings us to Exhibit B, this 1996 overlay mapped to current price action. Now, this year is not the only one that maps our current price action. We can also look at 2000, 1998, the 1960s, or 2018. They all have very similar trajectories. But what they have in common is also no near-term bear market, but some pullbacks to be expected in the year ahead. And looking at the near term of this chart, one would say that it looks like it very much aligns with that positive October leading into a positive November and December scenario. Now, I keep looking for historical trends to advise caution, and I'm just not finding them. Though I do think we will see 2 larger pullbacks next year, instead of the historical 1 larger pullback and then 1 more measured pullback. I think as we get into later cycle, volatility is just going to continue to increase, And the speed at which those pullbacks get bought up is going to tell us a lot about where we are in the cycle. Now, additionally, this chart also aligns with what we looked at 2 weeks ago for the general trajectory of price action during post-rate cut cycles. So with the general trajectory still being up, I'm assuming dips are still for buying, but we are going to have to keep a keen eye on things to see how they unfold over the next couple of weeks. If we do get a correction in later October, we are going to have to start to adapt our plans slightly. So to help us do that in the near term, let's dive right into the charts to see what they are saying for the week ahead. Okay, starting on the S&P 500, and not much to say except for that this keeps grinding higher, as does the NASDAQ. Yes, we had some little bumps in the road on Thursday and Friday last week, but generally things are moving in a positive trajectory. But the story of today really has to be gold, and we are almost to that target of $4,000 that we have had on the charts here. Actually, since the beginning of this channel, way back in April, we were already talking about $4,000. So we're finally getting there. Actually, I think in the futures price action, we might have tagged that. And if we just run 100% extension from that last move up, I think that puts us just a little bit above this target, because we can overshoot with momentum at just about 4,100, let's say, as a round number. So we have that overhead. But the thing to note is, obviously on the weekly, the RSI has been high historically, but the monthly is where we really have to start paying attention. And if we just draw a trend line to see how this aligns with historical trends for gold, and when we have been this extended on the monthly in the past, we have to go all the way back here to this spike in December of 1980. Let's just bring up the chart so we can see that. And that aligned actually with a spike and quite a pullback after that. And then on these runs up just before, I won't even go back to the price action from 68 because it barely registers on the chart here. But anytime we see this, it's not close to the beginning of a run. Let's say that. So we should expect some correction, some kind of pullback coming in for gold, because this has been an unprecedented historic move. Okay, the big story of today was AMD and NVIDIA, and OpenAI announced a partnership deal with AMD, causing this big spike up in pre-market. I think over 25%, if I'm not mistaken, 38%. Whew. That is quite the move from the close on Friday. But then at the open, we definitely saw a pullback, pulling back 10%. And the interesting thing with this, if we flip over to NVIDIA, it did have a 3% pullback pre-market, but NVIDIA did hold this breakout zone from last week, which is a good sign. So I'm really keeping a close, keen eye on NVIDIA to see if it can hold this level. We wouldn't really want to see it pull back below this level if we want to see this rally continue, because we've been saying we need NVIDIA to come along for the ride. But now you might be wondering, what's the better play since AMD already had this run? And we can map out some fib extensions to see where we could potentially go to. If we go back to AMD, and if we just do a 100% fib extension from our low in April, and we map that from the low to the high to this pullback, we're just going to look at the 100% extension, not the 618 way up there, and see where we could potentially get to from our current price action. And from where we are currently, if we got up to that extension, we would have 28% to the upside, potentially on AMD. And then if we look at NVIDIA and we run the same extension, and we go from the April low to the recent high to our low right here, and we go to the 100% extension and map that out from current price action, that would have us at 41%. So that would be a big move to NVIDIA. That's the upper end of the extension that I'm talking about. So if we're just projecting off price extensions, let's be clear, NVIDIA could have more room to run if they can both do a 100% extension, but it's going to be much harder for NVIDIA to make a move like this as a $4.5 trillion company. Okay, starting on Bitcoin and on the weekly, we got that breakout that we were hoping for from the weekly RSI downtrend. And historically, this happens right before bigger, more meaningful runs. And this first weekly candle was definitely a sign that we are moving in that direction. Additionally, it was the highest ever weekly candle close for Bitcoin, which is really impressive. Our other candles closed around 119,500. And I'm just going to draw a horizontal line there as a line in the sand. If we do see any pullbacks holding above that level or not closing daily candles back below that level would be an increased sign of strength. So let's go over to the daily. And if we look at the daily, you can see that we had a little bit of a weekend breakout and then broke out again to fresh all-time highs today for Bitcoin. And the daily RSI, if we just shape this up to the daily, also had that downtrend that we broke. We're now getting a bit extended on the daily, but I want to talk about overhead targets because this did look to me last week on the 4-hour time frame like we should cool off a little bit. But now just looking at where we are in the confluence model upper band, it does seem like even if we have a pullback, and you've probably heard me talk about this ad nauseum, that we usually take a couple, at least 2, sometimes 3 swings in the upper band. So even if we get a pullback, we should anticipate higher prices. And these pullbacks with where that confluence model center band all align above this line in the sand that we just drew at 119,500. So holding above that would be a good sign of strength. And I would be looking for entries if we do get back down there. And just based off of fib extensions that I did way in the past when we had our first run up right here in July, I was running some fib extensions, and the next overhead levels for us to anticipate some resistance, there might be a little bump in the road from 127 to 128K, but the real line in the sand as the major fib extension would be that 136 to 137K mark, which is incidentally, right, let's just mark right there for 137K. Now, not only is that an extension level of the move out of these previous lows, but it's also significant when one just thinks about the most traded zone. So the most traded zone, and I'm just thinking about institutional investors here, was around 108,000, as we were in this consolidation right there where that support came in. So in this whole range, 108,000 has been where we've seen the most purchases of Bitcoin. And once we get to 136 to 137K, those players are going to be up roughly 25%. And that might be just a round psychological number too, where bigger funds are looking at their holdings and are saying, well, shoot, we don't normally get these returns in the year. We should unload some of this. We've made 25% in a couple of weeks, not realizing what they're holding. So let's see if that level does give us some trouble. But now, we are really in blue sky breakouts in price discovery, and levels like that we can think about. We can also think about round psychological numbers like 150K as just being areas where people would naturally take some profits and some lifestyle chips off the table. Okay, moving over to Solana, where last week we were saying because of mean reversion and RSI being extended that we anticipated, and that was at this juncture here, that we should most likely cool off, and then we would see if our major underside trend line would hold as support. We discussed if this breaks down, that this was looking at the time like a bump and run pattern that we could correct all the way down to $205. Now it's starting to look like that might be off the table. The 4-hour RSI is naturally resetting, and we're almost getting a bit more of a flag pattern without that meaningful correction. And what I'm looking to in the short term is now we have this minor underside trend line that has been holding. And, if we would have corrected and bounced off this trend line, I would have been looking around $220, somewhere in that range. But now we're going to intersect this at much higher prices. The trajectory of this trend line, just in terms of how steep it is is steeper than the past 3 uptrends that we've seen since April. So that's notable too. Price action is just moving a lot faster right now. But if we zoom in to the 1 hour and we just look at this trend line that we've been holding, had a little bit of a wick underneath it just about an hour ago. But we could argue that this is a flag that we could run extensions from. And you could even say that we are getting even overhead resistance around just over 237. We just wicked above that today. And then I would say that this looks like an ascending triangle where selling is stepping in at even prices and buying demand is coming in at higher and higher prices. And we might get now that 4th time breakout that I love to talk about. 1, 2, 3, and then 4th time breakout. So I am in a trade on Solana that I got into actually a little bit too early because I wasn't patient. I saw this little wick and I went to play the breakout and I should have just waited because it was the 3rd time retest and it faked out. But now we have support and we have potential for this setup again tomorrow. And I'm still in this with a perp long. We have room to run on the 1 hour. The bands on the 1 hour are beginning to squeeze, which indicates volatility. If we look to the 4 hour, we are still just holding now actually above the upper band on the 4 hour. So that was resistance and now is playing a bit of support on this last bounce. So things are looking okay in the near term for Solana. If we flip over to ETH has also had a nice recovery. If you recall last week on the daily, after breaking down into the Confluence Model Center Cloud, we were getting resistance right here at the end of last week. And we broke back into the upper cloud showing strength and closed up there on a daily candle close today. ETH was really lagging, especially after it had broken down from that $4,000 level. And it has caught up really quickly. If we just bring up the RSI and mean reversion on the daily, we still have room to run. And all-time highs look to be in grasp for Ethereum. And I wouldn't be surprised if we hit that 5,600 level on this move up before this gets exhausted on the daily. So look to that for breakouts. We have been just cooling off a little bit, but we have plenty of room to run here on the 4 hour as well. We just got into the Confluence Model upper band, so we're assuming that we're going to take a couple swings up here as well, and that could get us to those price targets that we're talking about there. And we also had a little bit of a breakout in terms of this whole zone that we were consolidating in for a couple of days. We broke out from that today cleanly. This is just on the 1 hour. Did get a little bit overheated on the 1 hour, so that's why we're cooling off right now. But I think if we look at this over the next several days, we are going to see an attempt at all-time highs for Ethereum, even if it gets a pullback. I mean, it could come all the way back down to 4,500 from where it is now and still maintain great structure for an attempt of all-time highs. And the resistance we're finding right now, as well as being oversold on the 1 hour, is near this past peak at 4,750. Okay, bringing back one classic that I haven't talked about for a while, and that is Fartcoin. I stopped trading it in August after the daily trend broke down, and it has been underperforming for quite some time, but it has built great structure just off of the recovery from the lows. And the notable thing is that we just broke a couple month downtrend that we have seen on Fartcoin. So if we go back to the previous highs in August and we draw a trend line down and we connect that through right there, you can see that we got that breakout of that trend line today. And on the Confluence model, we also broke back into the center band and got a daily candle close. So yes, this still has a lot of proving to do, but for all intents and purposes, it is looking quite strong. We bounced off of, quite strong is a relative term. This pulled back way more than other assets. I'm meaning in the near term. We had a great bounce off the 236 fib level, which Fartcoin tends to really respect. And this could lead to a more meaningful recovery. So if you are playing perps, this is one to, in my opinion, keep your eyes on again to see if it has some more gas in the tank and can really make a move. Okay, looking to MicroStrategy, and I'm just looking at the 4-hour time frame because we were talking about this resistance on Friday, which was support at $360, a little bit below, but let's just say 360. And then that flipped into resistance, and we had a rejection once, twice, looked like 3 times or thrice on Friday, and we just barely got above that today, are holding it, but just by the skin of our teeth. If we do look at the 4-hour RSI and mean reversion, it is fairly elevated. My base case on Friday was based on where this was. We should see a little bit of a pullback. Maybe this trend line flips to support, and then we attempt it for that 4th time breakout. Right now, it doesn't look like we're getting that, but perhaps we could still get that if Bitcoin has a little bit of a pullback. But keep your eye on MicroStrategy. This break above is definitely notable. Yes, the 4-hour chart is a little bit overextended right now, but the daily has a ton of room to run. So this could really move, and perhaps it just consolidates for a few days before attempting to make a move. So keep this one on your radar. It could get interesting again, even though it has definitely fallen out of favor. Okay, moving on to Tesla, and I'm just going to look at the small time frames as well. I am still in my short expiry calls, very risky play, but we had a bounce today, which is a good sign. Obviously, I'm holding on my long-term spot. But once we broke out of this range on Thursday of last week, I entered some calls expiring on is it the 17th of this month? Let me pull up my calendar. When is next Friday? Yes, expiring on the 17th. And I was basically making a bet on this breaking highs and going to 500. It looked like we weren't getting that on Friday. Between the pullback on Thursday, I entered right about here, rejected on Friday, but then we had strong buying into the close. So that had me retaining half my position. I did sell half of it just in case, and if we would have broken down from this with 4-hour candle closes, I would have totally gotten out of the position. But that strong buying into the close and the bounce off the 4-hour RSI had me stay in that trade. And now it looks like we might attempt the top of this range again and potentially higher prices. But I don't think this is going to last too long for Tesla because of how extended the daily is. And it just seems like if we do have another push up and we get to this price extension at $535, even 500, that it would need to cool off a little bit after that. So let's see what it can do. But despite that fake out, it did show strength on Friday, and that followed through today, which is a good sign. Okay, Hood started the day today, fresh all-time highs again, and then had one of the most meaningful pullbacks we've seen on this stock for at least a month, since the 19th of August. And the reason was because they had an outage this morning. It seems like just in North America, maybe more concentrated to the western half. I talked to friends on the East Coast who weren't impacted, people in Europe who weren't impacted. But we did see a 6.5% pullback, which is quite something for Hood. We got over that 150 mark. Still too soon to say if this is really going to turn the trend. I would love for it to cool off eventually to try to get an entry at slightly better prices, and it just hasn't given that to us for months. But let's see. If we move on to Coin did see a red day today, I think on the back of Hood also pulling back. It should really be outperforming with crypto running. But we did break above this resistance at $380 at our fib extension level there, which was this previous peak. Little bit of a red day, but all in all, it was good that we held that breakout. The daily RSI is getting a bit overextended. We have this strong uptrend on the daily RSI that Coin really seems to respect. So even if we come back down, there is a chance we could just bounce from that and test higher prices, which would be a good sign to build some structure. If we, just came back down to 355 and then moved away from there. We closed this gap fill too last week. So all in all, Coin could see some cool off, but it looks like it's set up to move a little bit more over the longer time horizon. So let's see how this one unfolds.
Okay, moving on to the quantum space. I'm not going to cover all of them, but RGTI made fresh all-time highs again today. I, if you recall, got out of my options around that $31 level because that was the price target from the breakout. This ended up turning into a flag, and now the extension is targeting $48, and we are well on our way to getting there. So I've still been benefiting from this move just from my spot position. Obviously, options would have performed better, but I did reload options on QUBT. And if you recall, on Friday, I sold a lot of my shorter expiry calls, and I reloaded for January calls today as we were getting into this fib level. I missed the exact low because my platform, Robinhood, was down and not trading this morning, but I opened a bunch of calls for January 2026 with a $25 strike price. So we have plenty of time now because those other calls were expiring on the 17th of this month, which is why I got out of them on Friday. And we have a cup and handle price target at $39.50. And then we have the symmetrical triangle price target at $45. So the structure still looks good on this. It was nice that it gave me this entry today for much cheaper options on that pullback. So I'm just seeing how this one unfolds, but it definitely has been the laggard in the quantum space. Okay, on to our last section of chart requests from you guys. You guys have really been coming through with some solid chart requests. And this is one that we have looked at in the past. We've been in on trades. I've been out of it for a while, which is the trade desk. And as we've reviewed this in the past, we talked about the potential double bottom. Now, if this actually looked like a bear flag, that would have been targeting around $13 off the charts. But since we found that support, we're saying this is potentially off the table. And now if we're breaking above this, it could totally invalidate this and put higher price targets in play. And this has already been a meaningful move, just this little bounce. It doesn't look like much on the charts, but from $42 up to almost $54 today, 53.5. And we're back in the middle of this consolidation range. We broke above this underside support line, which was resistance for a couple days last week. We got back into the confluence model center cloud right there. So even though this has been really weak, it's looking like it's finding support and buyers are stepping in. On the 4 hour, we are a bit overheated on the 4 hour. So if we do cool off, and let's just see what the clouds are doing. The clouds on the 4 hour are kind of squeezing and expanding. We are in the upper band, so perhaps this can run a little bit more. And a good sign of strength, actually, would be if we could run to this upper limit at 56, which would pass all these previous highs. If we could do that before correcting a little bit and then perhaps finding this as support on the daily. So just going to the daily, that would look like a move up past those highs. And then we could find support at the daily cloud and continue from there. That would set positive structure to just pass all of those. And then if you want to get into this, you could try for a bounce play at the daily confluence model center cloud now as support. Okay, next one on the chart requests is OKLO, which I haven't been in for a bit since I played a falling wedge break, which was, where was that? I think it was this one right here that we played up to this target. So I missed a lot of this move. If we are looking at this, it's just not at a place, even though, buyers stepped in, and pushed it to higher prices today. I don't have edge with this. We're really extended in the upper band. I could run some fib extensions for price targets, but with the daily extended, I'm sure the weekly has been more extended. But, if you just look at this, even on the monthly RSI is hot. It was a nice move, but it's just, I want you guys to think about these charts and ask yourself, what's the opportunity right now? And the risk is just way too high. When a chart goes vertical like this, they usually eventually come back down to earth. So if this were to pull back, form a nice base, we could get a great entry. It would be a much safer play. Right now, a chart like this isn't giving me anything attractive from a risk to reward perspective. And yes, maybe it could keep running irrationally and you could look back and say, "Oh, Tom, look at the move you missed." Yeah, but I didn't have any edge on that move. I didn't have anything in my corner that was giving me an advantage in the trade. It's really just a roll of the dice at this point on if it's going to keep running or not. Okay, next request, which is recovering a bit better, which is CEP. And we were talking about this last week, how it defied expectations by really only taking one swing in the lower band instead of 2 or 3 and bouncing back up. So in terms of that and just the general chart structure, and we can even look at this on the 4-hour just to look at the price action. And we are just getting that subtle turn of trend. We had a bit of a double bottom here with this one odd wick. But you would consider, if it wasn't for that wick, this a double bottom. And then we started building positive structure from there in terms of higher high, higher low, now another higher high. So it's well on its way to recovery. You could suggest that this previous support right here, that could now play a bit of resistance. And it seems like, oh, look at that. Past support turning into current resistance exactly at $25. You can't make this stuff up. Whoever says technical analysis doesn't work, I don't know. You probably haven't looked at charts long enough, because that would be the logical place to find resistance. Now, if we do pull back from here, since we are back in the Confluence Model Center Cloud, we have the 200-day moving average coming through, and you want to get an entry, that's the logical place to look for support. 200-day moving average, Confluence Model Center Cloud from the underside, and then see if we can attack this to break through on the next attempt for CEP. Okay, and last 2 requests, I got some pair trade chart requests. So we have MicroStrategy and Tesla as the first one, and actually let me just go to my pre-existing pair trade chart. I am ready for the circumstance. And I've been looking at this on the 4-hour because there were so many fake outs. Normally historically I had traded this on the 1-hour time frame, and there were so many fake outs in this downtrend on the 1-hour that I just said I'm going to stick with the 4-hour, stay on the Tesla side of the trade. Now, it did flip back in the favor of MicroStrategy, and I have to admit, I did not take it because MicroStrategy at that point had just broken down from its trend line. I was concerned for further downside, but sometimes you should just trust what the trend is doing. Here on the pair chart, we have a mean reversion dot, but RSI isn't really that overextended. So this could very much continue in the favor of MicroStrategy. It's fallen so far behind, and if Bitcoin keeps running, that could absolutely be the case. But the one thing I always say with the pair chart is just trust the trend. And if Tesla has one more little run to that 500 to 530 range, perhaps this continues down just a little bit more before eventually turning up. But it seems like at some juncture in the near future, Tesla is going to cool off, and this is going to transition meaningfully in the favor of MicroStrategy again. And, MicroStrategy might not make new all-time highs this cycle. That's fine. But if Bitcoin's running, I could definitely see a scenario where MicroStrategy moves and Tesla has a period of correction. So keep your eye on it. Stick with the trend. Right now, I'd just be watching this because we did pull back a little bit. So it looks like it might be going in for some kind of trend flip, but I don't want to predict that. I would rather just react to the trend actually changing from blue back to orange. Okay, and last request, which is an interesting one. I've never charted this one before, but Solana versus Tesla, that pair, SOLUSDT/TSLA. And you know what? Everything's a pair. So crypto and equity, why not? All right, so this was moving in the favor of Tesla throughout September, which actually makes sense because Solana was really strong here in the summer, cooled off a little bit. Now it's been in the favor of Solana. Looks like it might be flipping back to Tesla, but Solana has just been consolidating the last couple of days. So, give this a moment. But the interesting thing with this one is picking the right time frame, because there was a lot of chop in here on the 4-hour. And if you went into the 1-hour, I wonder there are way too many flips on the 1-hour on this one. It's not quite as clean as MicroStrategy Tesla on the 1-hour, especially on trends like this. So maybe this is one of those where you have to trade it on the daily, which is what I do with the Bitcoin Solana pair. And let's see. So yeah, that had you in Solana much longer, Tesla. The daily might be the right one for this, but the only thing I really have to say with pair charts is go with the trend. Is it orange? Is it blue? That's your guide. This one does seem to be a little bit noisier. I don't think this would be my default go-to for pair trading, just because it seems like you would have to take a lot of actions. But, if those are the assets you have and you want to trade, be my guest. But I think you could probably find pairs that give you a little bit cleaner trend in either direction.
So that is it for the charts. While I was personally hoping for a little bit more of a pullback to enter a few names, Bitcoin and Solana, it really seems like the momentum is pushing ahead despite what the technicals on the shorter timeframes are saying. And with the US government shutdown grinding on and no economic data flowing out, we really need to let the money flows and the price action be our near-term guide. If anything big happens between now and Friday, I will of course be posting real-time updates on my X and every day throughout the day on my Patreon, particularly in the morning when the market opens and a lot is happening. And if anything really notable happens between now and Friday, I'll also push out a midweek update video here. But let's hope that it's just smooth sailing, and I'll see you guys for sure on Friday for the weekly wrap-up, or perhaps sooner. Bye for now.